The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the October 10th. Fantastic Friday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes. Perseverance. Steve Perseverance Rhodes. I like that. I got to change that middle name. And I believe it isn't the mountains ahead of us that will wear us out, but instead, it's the pebble in our shoe. So let's do everything in our power to find that pebble, get rid of that pebble. And on this fantastic Friday, let's make sure that you and I do everything we can to have a fantastic weekend. Now, one of the best ways that we can do this is to always remember that William Shakespeare, he once said, it is the mind that makes the body rich. And on Fridays at TFN, hey, we focus on getting our bodies rich with Nico and Paige at 12 noon. And during this hour, I'll do everything I can to assist you with your mind. And believe it or not, folks, the whole key to getting a good, healthy mind, it's in the questions we ask. That's right, it's the questions. You see, if you want a better life, just ask a better question. And please, this is the key. Make sure it's an empowering question. Not a question like, hey, what's wrong with me? But instead, a question that says, hey, how can I share all the wonderful qualities that you do have with others right now? Hey, I can tell you one way that you can do that. You can pick up the phone. You can dial in at 877-927-6648 internationally at 727-445-1044. And then together, you and I, we can go on a safari. We can go looking at a stock chart. We can go hunting for bulls and bears. After all, it is Fantastic Friday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got Dow futures. They're trading off about 27 points. They're off their session low. The hammer could be in. Oh, how'd that happen? We've got the S&P futures. They're down about 3 points, trade out at 19.22. NASDAQ off 26 points, trade out at 39.43. Russell down a few points as well. King dollar on the move this morning because of the euro. Well, not just the euro, but the euro, the yen, the Great British pound. The King is on the move, up 300 ticks, up 30 cents. It's trading out at 85.96. Goldilocks back $3, trading at 12.22. Silver off 14 pennies at 17.27. Light sweet crude trade down at 84.91, down 87 cents as we speak. Natural gas up a couple of pennies. Hey, over in Europe, they're having a tough time out there. Looks like the kegger party is over at the Oktoberfest celebration because the DAX, it is trading off 100 and where is that thing now? Where is the DAX? 150 points. Trade out at 88.54. In fact, the DAX and the FTSE both have broken through consolidations. This could be major trouble over in Europa. DAX has been traveling in a consolidation pattern really since the time frame of December 12, 2013. It's a 1,067-point consolidation. Now, if you take a look if you're watching us on TigerTV, I hope you are. If you're listening on the radio, your mobile device at tfn.mlbi, thank you so much for doing that. If you look at the bottom of the chart here that obviously if you're listening on a radio or mobile device, you can't be looking at it, but you can catch the archive on Channel 9. And, of course, you can go watch the stream of this live by, just go to the homepage at tfnn.com. You'll see it in the upper right-hand corner. You'll see the show streaming live to you. Of course, you can get it on your device by clicking on the button. That'll allow you to watch this on your device out here. You'll see that the 14-period relative strength indicator inside the DAX down around 23.41. It is in very oversold territory. Nonetheless, though, if it does not break and get back inside that consolidation range, it says 1,067 points to the downside. That's what the DAX is saying. If we take a look at the FTSE out here, FTSE's got a similar kind of consolidation. It's a 430-point consolidation. It's broken through that. It's right now dealing with the swing point here from October of 2013. Yes, the FTSE is trading all the way back into October of 2013. So that's what's going on over there. Are we going to catch a cold because of what's going on out there? I don't think so. Oh, Stevie has not changed his tune whatsoever out here. And it's really not Stevie. It is the charts out here. And this is the key. And I told the newsletter subscribers this morning that I would go through this chart in detail because I want you. You see, it is not I. It is not I that has this bullish outlook here. All I'm doing is just being agnostic and coming and taking a look at the charts, trading what it is that I see. I want you to see it too. And if you, in fact, you can identify, maybe there's something I'm overlooking here. Maybe you have a chart out here. You take a look at the summation index, or better yet, this morning, you go ahead and also take a look at the McClellan oscillator. And so what I'd like you to do is, if you can identify the opposite of what it is I'm going to show you, so that you can assist me in case I'm overlooking something here, that would be very helpful. And what is it that I'm looking at? As we take a look, I'm going to just blow up where we're at right now today so we can take a look at that. And we can see here at the bottom of my chart, in fact, I'm going to go ahead, I did this yesterday. Let me go ahead and shrink the summation index. Let me try to raise. I should have done this probably earlier. I should have done it earlier. Wasn't, well, I guess I got to raise this. In order to raise this, yep, that's what it was. That's the trick out here. And then pull this down just a bit. Okay, so now so I have my chart there. I've got, pretty much 2/3, 1/3. And I really want you to focus on the bottom portion of the chart here. Yesterday, amazing volume to the downside inside of the New York Stock Exchange. Extraordinary volume when you take a look at up volume versus down volume. I mean, just pummeled out there. Now, the yellow line on my chart, by the way, the yellow diagonal lines that you're looking at, those are rising price channels inside of the New York Stock Exchange going back to 2011, I believe. And price just kind of stopped right there, dead on its tracks. Now, what I want you to really focus on is I want you to take a look at that price oscillator on the bottom. And I want you to see that it's making higher lows out here. It's making higher lows. And the reason is because we're going to go back and we're going to take a look at other significant bottoms inside the New York Stock Exchange. And inside the New York Stock Exchange, if you go back to the last time that we saw this pattern, it was in August of 2014, and we obviously made a low on August the 7th. I can't tell you how it's going to happen, why it's going to happen. I can just tell you that unless things are different this time, what the market is doing, it's forming a bottom out here. Now, that's the blown up, so you can see where we're at right now. Now what we're going to do is we're going to start to shrink things down. And I'm going to take us back on a little joyride out here. That joyride, because the theme park is open. Now, you can see here the rising price channel, which has not been broken, by the way. This is from October of 2011. We took a look at horizontal levels of support that have been broken this morning inside the DAX, inside the FTSE. They're just relying upon you and me. They're just relying upon the good old USA. But right now, we're trading our market, our charts out here. Now, what I'm going to really do is try to pull this thing back to the side and get back to 2007. Okay, we're back at 2007. I'm going to go ahead. I can blow this up just a little bit. You might remember the trading session back here. You may remember August 16, 2007, as the market was making a nice low out here, making a nice low. And what did we have going on inside of the oscillator out here? That's right, a higher low that was being formed. Made a pretty significant bottom. In fact, it took the New York Stock Exchange all the way up to its high in October of 2007. As the market started careening down out here, oh, don't tell me that my cursor's not going to start working there. Okay, there we go. As the market started moving down, we made another low here, made a little retracement coming into the November 2007 timeframe. What was it doing? It had a slightly rising price oscillator. Market, right? Now, this is in the bear market, right? There's no question we were in a bear market back in starting October of 2007. So even in a bear market, if we are in a bear market out here, we got to pay attention to the mere fact that we're making lower lows in price and we're making higher lows inside that price oscillator. Take a look at the time period here back in March of 2008. Same setup. Let's take a look at, and we saw a pretty nice bounce here. Not such a big bounce, but we did see a bounce back here in July of 2008. All right, so you got that same pattern in place. How about as the market was creaming down back in November of 2008? Lower price, higher low inside the oscillator. How about during the March 2009? I think we covered that yesterday. Look, folks, here's the key. You can go back on this chart. We can keep going back further and further and further. But what you will see is each time we see lower price, in fact, you can take that March 2009, looks almost like what we're looking at right now. That's the amazing thing. When you take a look at these three little bumps out here, that's what we're seeing here as we speak right now. Is that going to happen? I don't know what's going to unfold next. What I do know is let's just kind of get out of our minds and look at the stock chart and look at the patterns and look at what I consider to be the bigger breadth of the market that is out here. And this is the pattern that is in place. Can it change? Yeah, it can change in a heartbeat. We can see somehow that price oscillator dip below October 2nd, last Thursday's out there. But until that takes place, the pattern that is out here, and you can see as I'm flipping through the chart, now in 2010, So if you were just tuning in, go back, catch the archive of this show. If you're listening on the radio or mobile device, don't believe me, just believe the stock chart. Because that's exactly what happened last time. We also made these lows back here in 2011. And so the question inside the den is, Steve, if the channel is broken through, would I turn bearish? Absolutely not. It would just simply because, you see, when you break through a channel line, when you break through a consolidation, one of the real keys is that what you need to see is you need to see a test of that area. Was it really a breakout? So in the case of the DAX, in the case of the FTSE, we won't really know until we see price get back and try to get back inside that consolidation, very much like our IWM. Look, the canary in the coal mine is the IWM for us right now. If we go take a look at the IWM, just as an example, and it's a great question. Of course, we should really take a look at the Russell 2000. But if we take a look at the IWM, it too has been traveling in a consolidation. It looks like the FTSE. It looks like the DAX out here. It's a 13-point consolidation. It's a from 107 to 120. We broke through that consolidation level on October the 7th, 2 days ago. And then what happened, not yesterday, but on Wednesday, key reversal session. The interesting thing here about the IWM, as weak as it is, it didn't even take out the bottom of support, which is that bullish engulfing key reversal session out here. Price got back inside. So I don't know what the heck the IWM is doing at this stage. Look, if there's a clear break at this stage, what the IWM should have done if it was totally bearish is once it broke through that level on October 7th, there should not have been a key reversal candle that was formed. It should have tested that area, rejected it. So the IWM, it's trying to figure out what its brothers and sisters are doing out here. And if we do take a look at brothers and sisters, what we're going to find is that inside the NASDAQ out here, I believe on its 5-hour energy chart, it may have formed a little hammer candle as we came to the 9 o'clock session. This is Steve Rhodes and TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. I know I had made mention that, hey, I didn't know what the Russell 2000 was doing, and that's not completely true. If we do take a look at the Russell 2000 chart out there, as was really pointed out, well pointed out by RP in the Tiger's Den, and RP was pointing out that, hey, the low of that session from Wednesday was taken out, and that's true during this morning's session out here. However, it's a daily candle that we are focused on. The low there is 1060.40, and even if that gets taken out, it doesn't even bother me that much at this stage, because what is potentially forming out here inside of the Russell 2000, if we take a look at the futures contract, and we're looking at the continuous contract, I'm coming from the July 1st high, and that's at a price point at 12.1070 down to the B point, a retracement down into August the 1st, makes a low at 11.0310, and then makes a retracement, a 78% retracement on September the 3rd. That becomes the C point. Your 1 to 1.272 A to B equals CD takes you down to 1051. The interesting thing is the expansion of swing points, the swing points being May 15, 2014 at the low to the high out here on July 1st. Your 1.272 expansion of that is 1042. So you see, even if the Russell 2000 breaks through that, you know, it's got a bullish pattern that it is in the process of forming. Now, it needs to have a reversal signal. And I can't say that we couldn't have that today, because the way that these days have been trading, anything is possible out there. What's also interesting about the Russell 2000 on a daily basis is as it's making these lower lows out here, it's doing it with less weakness. And so that is more of a bullish sign out here. We don't have the bullish reversal, but I do know that the pattern that is in play here, when I take a look at the New York Stock Exchange, the wider swath of the market, and by the way, it's the composite as well. If we take a look at the summation index for the NASDAQ composite, it too is forming what? It too is forming higher lows out here as it is trying to push lower. So all the indications as we speak right now, there's just no way to shake me from the standpoint that what the charts are communicating to me, it's not my opinion. This is not my opinion. This is just simply go back, do the homework. I mean, that's really the whole key. And then just simply report on, give the homework assignment. What does the homework assignment? Now, because I can't control what the market does next, you know, it could provide us with a new assignment. But right now, we just have to go with the information that we have right now. And let's talk about some of that information that we do have right now. What else would it be that's showing us that, hey, maybe there's a bottom that's maybe even being put in today? Well, it could be that 5-hour energy drink brought to us by Saratoga Bob and the Tiger's Den out here. If we take a look at the 300-minute chart, that's what I've got on my screen out here. You're familiar with this descending price channel that it has. This was drawn drawn in a while ago. If we take a look at the candle session that just ended here at 9 o'clock this morning, it's a hammer candle. And not only is it a hammer candle, if you start from the highs back here on the trading session of, it says I got to select an object, okay, back here on the trading session of September 24th, and you start doing your peak to trough counts out here, well, that hammer candle also could be considered a trough G. Now, unfortunately, this is a 5-hour chart, the next 5-hour candle, which is where you would get your confirmation of that. That doesn't occur until 2 p.m., so that's a long time to wait out there. But what price did was it got down to the bottom of the price channel, and it formed a hammer. That says that the low inside the Dow futures now at 16,614 is going to be a significant support level out there. So does the bounce begin today? Hey, look, it's Friday. I don't know. The close will tell us a whole bunch out here. I can tell you what the message of the markets is. I can tell you what the bulls and the bears are going ahead and communicating to us. And right now, it sounds like there's that potential for a significant bottom that is being formed. As I say, this really doesn't mean anything until 2 p.m. today, until we come back and we take a look at that. That's what's going on the 5-hour energy drink chart for the Dow futures out here. Let's go check out the NASDAQ. What did the NASDAQ futures do on its 5-hour chart? Then maybe I'll go switch down to a 2-hour chart. And the NASDAQ also formed a hammer candle out here as well. That says that support of that low is pretty important. What we can see here is that the price did not get down yet and test the bottom of its descending price channel. Maybe that's going to happen during the, maybe even during my 10 o'clock hour out here. So that's the message. Let's look at the 120-minute time frame charts here. Let's take a look at the 2-hour chart for the NASDAQ. What do we have out here? Even the NASDAQ has a potential trough G. It's a multiple different counts that are out here, but there is that possibility, and that would be starting again. That would be back here at the trading session of right about 5:15 in the evening on September the 24th as well. So that's with the 120-minute chart. We can see price here holding the bottom of that descending price channel out here. No bullish reversal signal or anything along those lines, but that is what's going on with that chart. Let's finish it off. Let's go ahead. I didn't take a look at the ES, I don't think. So let me see if I can pop that up on the screen for you. And even here inside the ES, a potential seventh wave to the downside out there as well that has formed as we were coming on the air, well, as John Logan was coming on at 8 o'clock. This is Steve Rhodes. This is TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got down 23 points. Seized right now at 16,634. S&P off 5 at 1922. Composite down 36 at 43.41. Russell off 7 points at 10.60. The DAX down 175 right now. The FTSE off 67. So they're struggling over in Europe. To the upside, we got Exact Sciences Corp up 38%. What is that? EXAS. Why is that up 37% out here? Well, it's up 37%. That is for sure. Infosys up 5%, up $3. Lakeland Industries up 11% out here. Alpha Pro Tech up 28%. Deventis up 2.25%. Nextera NEE, that's up 1.7. To the downside, you got Tesla. I think they announced a super fast car out here, didn't they? Something like that. Goes from does the 1 mile in about 1/10 of a second. No, I don't even know what it does. But that's down 14%. So it's off trade now to 242. NXP Semiconductor, that's down about $9. Abaco Technologies, that's off $8. We've got gold down 270. Let's take just a quick look at Goldilocks out here. I've had a number of questions about gold. In my views, how could I, what would it take to get me to change to bearish mode on gold? And basically, I can't flip to that side. I can say being neutral, but I can't flip to being bearish on gold. If we take a look at gold, this is the weekly contract, by the way, that we're looking at right now. And what this is going to form, or should form, look, anything can happen. If gold closes today below the open of the week, which was 1192, then this does not become a key reversal session. Take a look at Goldilocks out here. How important are these key reversal sessions out here? Take a look at gold back on the week ended March 17, 2014. Up at the top, you've got a key reversal session. That marked the top. Is this week here marking the bottom? Yeah, I think so. I absolutely do think so. In fact, if you take a look at the COT data, so what would it take in order to get me to flip to the dark side out here inside gold? I'd have to see at 3:30, and I don't know that I'll be able to do it at 3:30 this afternoon. I'll certainly do it tonight or tomorrow. Take a look and see what the commitment of traders data for the commercials is showing. These guys have flipped to a less net short position, a lot less net short than where they were at the most previous low that we saw out here back in June. Hey, look, they could get lower, and they may get lower. I may see them even take less, okay, which is likely what I expect will happen. But it does, they would have to flip to becoming more net short in order for that to take place out there. So let's go to Lou in Nashua. Lou, thanks for calling. Thanks for holding. How you doing this morning?
Hey, Steve. How you doing?
Excellent. Thanks so much for asking. Yep. Tell me what you'd like to look at, how I can assist you.
Do you see a setup for a possible day trade on the Mini, S&P Mini?
Well, which way are you looking to trade it?
That's what I'm not sure of.
Okay. Well, I don't know. I'm calling for a significant bottom in the market, and so and when I say I'm calling, it's really the charts that are persuading me to call that, and so. So now if you're looking for a day trade, I got to go down to a real short kind of time frame out here. Let me see if I can do a couple things. Well, let's just take a look at, you wanted the ES. Let me put the ES chart out here. Give me the ES. As we take a look at the ES mini on a 30-minute basis out here, look, you could take a short. Here's what you'd really like to see, Lou, is you'd like to see, I would say at this stage here, since you're not in, and it's traded at 1923, the next area of potential resistance inside the ES Mini is 1928. If we take a look at our TAS market profiles out here, if you can see a break above that resistance level at 1928, then you can consider taking a long trade, and I would say you'd put your stop somewhere below 1920, and that's using a 30-minute chart. Coming off of yesterday's roller coaster ride to the downside, you never saw on a 30-minute basis, you never saw the ES Mini break above that level. And so I don't know if it's going to be able to do that here as we speak right now. But that, to me, is where I would take a look at the trade. And then what you would do is you'd go ahead and take a look at for possible retracements. And if I look at retracements for you, just to give you an idea where those levels are at, the first retracement, the 0.382 retracement, comes in right around 1933. So at 1933, it could be a level where your price breaks above 1928. 1933 could be a level where folks get off of that ride at that stage, let some folks off. But some people may want to continue riding it all the way up to the 1946 level. So 1946 would be a spot where you would look at being able to probably close out the trade. It just really depends on what kind of bars are moving into it. So that's how I would take a look at it on a 30-minute chart. And we're getting pretty close to that 1928 level right now. Does that assist you?
Yes, it does.
So if it can't break above the 1928 level and that holds as resistance, then as far as your potential, if you're looking for, then you can almost play to the short side. But I struggle to really give somebody advice on playing this one to the short side at this stage. If it struggles at that area, 1928, then your buy setup is probably somewhere around 1923 to 1920 or so out there. So that's my call with the information that we've got at the moment.
Great. Okay, thanks.
You bet. That was Lou in Nashua. Right now, the Dow's up 47, S&P is up 4, but of course that could change, in an absolute heartbeat out there. So as we took a look at gold, let's do the same thing for silver out here. So gold has given us a nice bottoming sign out there with a key reversal week. And again, you go back to the charts and you can take a look at it. At the highs, it was a key reversal week as well, and that led to the lower price that we're in right now. Let's go see what silver is doing on its weekly chart out here. And silver just having an inside week as we see right now. So silver not as strong as gold. Does that bother me? No. It's silver, I think, more so will tag along with gold once it gets ready to take off for the moon. Now, silver here, when it made its high, when it made a couple of highs out here, if you take a look at the high back in October of 2013. That was a key reversal, or at least an outside session out there. High and low being exceeded from the prior week, and a reversal signal. Same thing took place back in February 24th. Of 2014 out here. This is a piercing candle out here. That is a bullish reversal sign. But I'm going to go with Goldilocks for the message out there as to what it is communicating to us. Let's take a look at some equities here that are popping and dropping in the marketplace. So maybe we'll look at the currency, see what we have going. Let's look at the currency first. Let's do that. Let's go take a look at the euro. And let me go ahead and flip that back to the weekly chart as well, because you're seeing important messages from the market. And if we take a look at the euro, let me see, did the open, did we get below last week's low? Last week's low, I've got a 125 even, Steven. This week's low, 125.058. So we don't have a key reversal session going on the weekly chart here for the euro. Right now, it's still a piercing candle, so it still is a reversal candle. And as long as it probably closes above 1.2606, somewhere right around there, that continues to be a bullish reversal. You'd prefer to see a bullish engulfing candle. Well, it depends on what side it is that you're looking at. If you're looking for confirmation of a low, is really what I should say, you'd really prefer to see a bullish engulfing candle where where this body here, this green body, wraps around the red body. That red body being 1.2681 would be the target for the euro out there. But if we take a look at the daily chart, we put the daily back on my screen here for you. The daily chart looks pretty good at this stage. So the back off that we've seen has just simply been just a retracement. And doesn't look like too bad of a retracement at this stage of the game. All right, so now let's go take a look at some stocks that are popping and dropping. Kind of interesting. The Dow's up by $70 out there. And really not that not that unusual, to see what it is that we see just based on the messages of the markets. And this is going to be one choppy, one messy, major bottom that is forming in the marketplace. And I know that there are very few people in my camp, and that's okay. Sometimes it is camp run amok. Right now, it's a camp, and for me, I think the best thing that I can do for each of you is to have conviction, absolute conviction. I don't think, when I'll be neutral when the charts suggest to be neutral, but when I do see the chart patterns that are doing what they do, and most of you that know me, either know me by listening to me over the phone or the air, or maybe by speaking to me by phone, you know that, look, I have this belief, the way you do anything is the way you do everything, and that I do the homework out there. That I go back and I take a look at it. I've got the passion. I have a passion for trying to understand the message of the markets out here, and that is one thing that I know that I do, and therefore I think that you want me to show up on that fence, right? You do want me to show up on that fence, right? That's what Jack Nick, I got to get that, probably got to get that little sound clip out there, and when I do show up on that fence, what you want to know is that I've got conviction. And I do have conviction, so I do not listen to the news or really anything else. I don't really allow anything. I doesn't mean I don't listen to it. I do listen to it, but then I just simply come back to the charts and I just reflect upon what is the message of the charts out there. And I think that's what each of us do here at TFNN, and that's the beautiful thing, and that's why each of us carry with us maybe a different message, and that's really what you should want. You should want people that are taking a look at charts from a different perspective, from their perspective, because they've done the homework. They've done the work. It's their experience that you are pulling from out there. And so even if we have differing opinions out here, to me, I think that is the absolute best for each of us out here inside the marketplace. And then what we do is we give you all the clues and things for you to go be able to take a look at. And then that becomes a real beautiful thing out here. So let's take a look at this Exact Sciences Corp, EXAS. And where else do you get this kind of information? Where else do you come in at 9 o'clock in the morning where futures are down? They were down huge overnight. It looks like the world is coming to an end. I don't listen to people on CNBC or Bloomberg or Fox Business News, but I can guarantee you, I can't guarantee this. How many people showed up at 9 o'clock this morning and gave conviction and said, sorry, there's still a bottom that's being formed, and here's the reasons why. Yeah, here's the reasons why there's a significant bottom that's being formed. I don't know that they were really out there, and if they were, then good for them. And hopefully, they were looking at some other element of the charts that I didn't look at, divergences or what have you. And so, anyways, let's say I know you don't want me to just kind of get on the soapbox, but every now and then I do feel like I need to get on that soapbox because I do get emails and cards and letters, and keep them coming, folks, from folks that just say, how can I have that opinion out there, as if somebody's really trying to sway me and get me onto their thought process and their side. And as I really try to say, it's not about my thought process, my side. What you guys are really paying me for is to read the charts and give you that information. And so that's what I do each and every day. Now, if we take a look at the Exact Sciences, EXAS, that ticker symbol out here, September 3rd had a swing point high up at 23.20. Did volume of 4 million shares. Hey, it's up this morning, up and over that area with already 5.6 million shares. Hey, that's called taking out a swing point with volume, accelerated volume, wide price spread. So where's this puppy going to? I think we ought to put this on a weekly chart out here, because this thing looks like it's headed to a new constellation out here. Yeah, it most certainly is. It's let's see, the weekly swing point at 14 million, and so far this week we're at 11. Yeah, so this thing's taken out a weekly swing point with volume. What does that set up? That actually sets up, as far as A to B equals CD patterns inside this equity. Where's its moonshot going to take us to? Well, the A point, B point, C point is going to be this week. Come on, work for me, would you? Looks like the 1-to-1, 12.51. Nah, I don't think so. It's not going to 12. I'm sorry, it's not 29.85. That's the number. No, it's not going to 29.85. It's going to 33.25, probably at a minimum, as it has taken out a swing point daily, weekly, wide price spread, accelerating volume out there. And it looks like that is where Exact Sciences will be headed to. Let's take a look at Info Systems. INFY is the ticker symbol, up 5%, up $3. Let's see what this is doing on a weekly basis. So this is trying to get up over a swing point here from March the 3rd, 2014. 6.4 million shares out there so far, up with 10 million shares. So it's taken on a swing point. If it can close above 63.20. That so far is held as resistance out there. If you can get above 63.20, you'd have a confirmed A to B equals CD to the upside inside of this equity. Let's take a look at what we have going on in the, let's look at Wynn Resorts. Wynn Resorts has struggled out there for sure. Let's see if Wynn Resorts is trying to make a, Wynn Resorts has its own key reversal week out here, but that was back in September 15th. 2014. That level has held. Hasn't really done much since then, just simply has moved sideways. That's the weekly chart, so not a whole lot there inside Wynn Resorts. We can see that it's got some resistance, little gap down, this little window that was formed out here the week. So right around 191.89 is resistance inside of Wynn Resorts. She's trading out at 181.20 as we speak. Let's take a look at Biogen. BIIB is a ticker symbol, up $2.50. Let's see what this thing is doing on a weekly basis as well out here. Just consolidating up at these highs. Biogen still traveling with inside its swing point high from March 17th. Got volume of 11 million shares up there. It likely wants to go test that high. 358.89. Steve Rhodes with TFNN. Be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're
told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's up 50 points, right? 45 points. S&P up 2. Composite down 20. Russell is basically flat out there. Boy, trouble's over in Europe this morning for sure. DAX off 170. FTSE down 62. We go back to the ES mini chart out there. We had Lou from Nashua that had called earlier. And we take a look at what else is going on, what other patterns are associated in the 30-minute chart here for the ES. What you're going to see is about a 50-point consolidation. I've got it marked as 49 points. It shouldn't have been so exact out there. But about a 50-point consolidation. That consolidation pattern, sideways moves, really starting off at about 12 noon on October the 2nd. So that low, 1918 or so, is the consolidation low. The top of it is really a bit higher than the 1966 level out there. That 1966.50 level is really important for me. If we do see price get above 1966.50, and let's face it, anything can happen today, then you should absolutely not be on the short side of the market. Is that what I expect? I can't control or know what price is going to do. I can just identify for you target areas that would provide you with information to assist you in your trading. So that 1918-ish area is real important. We did see price break below it just slightly. That was yesterday. That was during the evening. No, I'm sorry. That was on October the 9th. Yeah, that was yesterday during the evening. Even this morning, we saw a little bit of a break below that. Price has gotten back inside that consolidation. The message here is that it's telling us that it wants to stay inside this consolidation zone out here. So, however, if you see a break below this with any kind of conviction to the downside, I would say conviction to the downside means getting below the intra-session low of 19.1125. What your expectation should be is about another 45-point move or so to the downside. Likewise, if it can't break it down, what's it going to do? It's going to bust it up. So the level that I gave earlier this morning, about 19.28 to Lou, and said, hey, why don't you just sit tight? Because your best place is to try to take a long trade if you want. It's probably around 19.18 and a quarter. Or if it gets above 19.28, closes above 19.28, then you've got a potential change in trend that is taking place. And what I want you to focus on here on this 30-minute chart as I blow this up on my screen, as I try to blow this up on my screen, I want you to take a look at that point of control line here at 19.23 and the support line at 19.2040. We can see that those two are closer together than the resistance level here. So it's a suggestion to us that it is buyers or bulls that are really the ones in control during this, as John likes to refer to it as the fair auction out here. So it's really the bulls. So we got the bottom of this consolidation that has not been able to be breaking through. We've got looks like the bulls are really in control here in a market where the bears have had control certainly since the top out there. And so this is what I think this is the area where you want to focus on. And it's really in between this range that will help you to set the tone for the day as far as what the ES Mini at least wants to do, and that's on the 30-minute basis. So right now, I'd have to say you're just simply in neutral territory. If you're short, there's no reason to get out. If you are, if you're long, make sure you've got your stop place somewhere below 19.18 or maybe even 19.11. What was it? 19.11 and a quarter, something like that out there. And if you're neutral right now, neutral's a pretty good place to be at the moment. So that's how I take a look at that's how I take a look at what the ES Mini is doing on its short time frame. But good news, folks, is that we got Mr. Tom O'Brien, we got Daryl Martin. They're going to be up next. They're going to offer you their opinions, and they may differ than mine, and that is what we call a beautiful thing. So right now we got the Dow up 53. The S&P is up 3.5. And as always, thanks so much for joining us here at TFNN. It is Fantastic Friday. And you know what that means. It means I want each of you to have a fantastic weekend. And I'll look forward to seeing you bright early Monday morning. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.